Welcome investors to Joe's Investment Express. Today I want to introduce you to an old friend, How to Make Money in Stocks by William J. O'Neill. This really is an old friend to me because over the years I just keep coming back and revisiting it and getting new concepts and ideas out of it. And it's really been life-changing to me as far as investing. This is kind of the foundational work for growth investing. What William J. O'Neill did was invent a system, the CAN-SLIM system, based upon research. It wasn't anecdotal. He researched hundreds and hundreds of charts from like the 1880s to the 1990s to figure out which companies are super performers and why. So the other thing I really like about this book is it has, I think, hundreds of charts, and they're annotated. He shows you the cup with handles, the double bottoms, the 3 weeks tight, the bounces off of the 50-day moving average, and all of those things. And as you know, a picture's worth 1,000 words, and you can just study those charts over and over and see, what Microsoft and Home Depot and Walmart and Costco and all of these stocks were doing technically. So I put out a video on Mark Minervini's book, Trade Like a Stock Market Wizard, which I think is the best investing book out of the thousands of books that have been written. And I will post a link to my video at the end of this video and in the description below. But if you are a beginner or even an advanced beginner, you really should read this one first. Minervini is definitely more complex and deeper in the weeds, so to speak. I would call that intermediate/advanced. So if you don't know much about growth investing or technical analysis, then start with this one. And Minervini, I listen to his study sessions every week via Minervini Private Access, and over again he says the only books you need are his 3 books and this one by William J. O'Neill. And to a large extent, I agree. Although I would add one more, which I'm going to do in my last video. So in just a second here, let me walk you through this book. I love the old school generic title, How to Make Money in Stocks. Doesn't get more basic than that. Although I hate this cover is so loud and obnoxious. I realize they're trying to sell books, but I don't think they needed to make it neon orange with this splashy yellow sunburst on it. But yeah, winning system and good times are bad. So let's look at a picture of the man himself, William J. O'Neill. And he was the youngest person ever to buy a seat on the New York Stock Exchange in like 1964. And he became, a spectacular millionaire, built an empire, Investor's Business Daily. And he famously made millions trading a tiny portfolio of just a handful of stocks, sometimes only 5 at a time. So let me walk you through the table of contents here, and I will try to keep this under 10 minutes because I know you guys are busy, and I am too. Okay, so let's jump into the book. There's 3 parts, part 1, part 2, part 1, part 2, part 3. I don't know why I'm saying that. The first part is on his CAN-SLIM system, and it seems pretty self-explanatory just reading the headlines, but the charts are invaluable, and he breaks it down in great detail, and it's really enlightening. Trust me, you need to read the chapters, not just the titles of these chapters. But so here's his system, and even though it was invented, gosh, I don't know, 60s, 70s, 80s, 90s, it still works. It works like a charm today because, businesses haven't changed. What makes a healthy growing business and a healthy growing stock hasn't changed. So the first is the C is current big or accelerating quarterly earnings and sales. The bigger the increases, the better. The A stands for annual earnings increases, and again, you want to look for big growth from year to year. You want to look for a huge breakout year where a company goes from being unprofitable to suddenly making a few dollars a share, or going from $2 a share to $5 a share, that kind of thing. The N stands for new companies, new products that are disrupting and changing the world, new management, and new highs coming off of properly formed chart bases. So yesterday's leaders become laggards, and we want to be in the new leaders. Usually these are companies that are less than 5 years old and have something new. Like if you look at the spectacular success of Netflix in its early days, it brought an entirely new concept to consumers, getting movies via the mail and then streaming via the internet. If you look at Tesla, they brought something entirely new to the world, an electric car that was fast and beautiful and reliable. Okay, you can argue with me on that, but it's gotten way, way better. My dad has a Model 3 and it's awesome. Or a big management change. And then instead of bottom fishing and trying to pick the bottom on stocks going down and getting a good value, he flips it and he looks for stocks that are making new highs. High goes higher. That's what Minervini does too. And let me tell you, and that's what I do too, and it really works. Chapter 6, supply and demand. This is about analyzing volume. Volume is like the footprint that buyers leave when they're buying and selling stock. And we want to see the footprints of elephants getting into a stock. And when we see those footprints leaving a stock, that's our signal to get out. He talks in chapter 7 about leaders versus laggards, buying leaders, how to identify between the two, how to know when the stock you own has become a laggard. Chapter 8, he talks about the importance of growing institutional sponsorship. You want to see more and more mutual funds coming into your stock. And then 9, which he probably should start with the M. It should probably be 𝙎𝙚𝙤𝙬 or something, but that doesn't sound very good. It's market direction. You got to figure out which way the market's going. A rising tide lifts all boats, and vice versa. We're seeing that right now in the bear market. And you've got to swim with the direction of the market and know when to really get on the gas and when to hit the brakes, so to speak. That's part 1. Wow, we're going to go over 10 minutes. I'm sorry. I apologize. Hopefully it'll be worth it. Part 2, be smart from the start. So chapter 10, when you must sell and cut every loss. He talks a lot about using sell stops and why, though we all hate to sell at a loss, he talks about selling at a 7 or 8% loss and why that is so important. And it really is. My trading has been so much better since I started being very disciplined with sell stops. Chapter 11, he shows you maybe the hardest thing in investing. It's not when to buy a stock, it's when to sell a stock. So he talks about when topping signals, signs that a stock is breaking down, taking partial profits, etc. And a lot of this has to do with the 50-day average and things like that. Chapter 12 is kind of a hodgepodge of different things. He argues against diversification here. That's kind of blasphemy. This is the opposite of what Kramer says, and I think Peter Lynch too. He was really into only holding, 3 or 4 or 5 stocks, even if you have a huge portfolio, and he makes some pretty convincing points. IPOs, options, selling short. Now, he's got a whole book on selling short. And if you want to short stocks, which seems tempting right now, but let me tell you, it's really hard, a lot harder than the long side, then you probably should get his book on shorting stocks too. Maybe I'll link that in the description as well. Bonds, etc. And then chapter 13 is a great chapter 21 costly common mistakes investors make. And guess what? Yours truly, me, myself, I made all of these mistakes more than once, and I bet you have too. That'll be really helpful for you and me. And then in part 3, there's just a whole bunch more charts on market winners from the past. How do you study? One of the principal ways you become a good investor is by studying strongly performing companies and charts from the past and figuring out why they did what they did. I could go on, but I think you get the idea, and I really encourage you to buy my old friend here, How to Make Money in Stocks, and read it and underline and highlight and then set it down for a few weeks and then pick it up and read it again and just keep revisiting it over the years like I have. I think it'll really, I don't know about revolutionize your trading, but it will make you much better as a trader. If you are interested in being a growth trader, several weeks to several months, occasional years in time span. All right, well, let me know what you think. I bet a lot of you have already read this book. It's been out since 1994. Make sure you get the latest edition, which I think came out in 2007. It's the orange one. Does it say which edition? 4th edition. If you've already read it, let me know what you think. Is it really one of the greatest books of all time? Investing books, like I think it is. And if you don't own it and decide to buy it, let me know your thoughts on it. And if you could buy through the description under my video, if you click on the affiliate link, then I'll get like 25 cents or 50 cents for you doing it, which would be really helpful for me in terms of building the channel. All right, let's hope for a better week in the market next week. Take care, everybody.